I don't think I should do this video. I don't know if it's a good idea. Could get me into a lot of trouble. All right, guys, I don't care. I'm going to do this video. Today's video, we are looking at my predictions for the upcoming calendar year. 2020 predictions. Let's dive in. All right, guys, so we have seen a crazy 2019. At the end of this month, what I'm going to do is a full recap of everything that we saw in 2019 and kind of how we saw monetary policy change throughout the year, its impact on the markets. And so we'll do a full video on that once we get a little bit closer to the end of the year so that we can do a nice recap from January through December. But for this video today, I want to share with you guys my personal opinions, my predictions for what will happen, what I think will happen in the year of 2020. So without further ado, let's dive in. And at the end, if you do enjoy this video and you like the content, it would mean the world to me if you would subscribe to the channel and like the video so that other people will see it. And if you want to help me continue to make videos like this, you can support me on Patreon, support my work, help me continue to make videos like this. All right, let us dive in. The first thing that I think that we are bound to see in 2020, this is probably the safest prediction of all. I think we are going to see a massive increase in volatility. In the last year, from January until now, we've seen very low volatility. It's been an extremely smooth ride, historically speaking, in the markets, and usually years like that are followed by years with heightened volatility. Even if you just look back at the last couple of years, when you took a look at the years 2016 through 2017, those were 2 years that were combined with unprecedented levels of low volatility, and 2018, last year, marked one of the highest volatility years that we've had in a very long time. And so naturally you'd expect a high volatility year like last year to be followed by a year like this, where we have a kind of a reversion to the mean, a return to normalcy where we have a lot lower volatility. And that you'd expect then, because of the nature of how low the volatility has been this year, to be followed by a year with a little bit higher volatility. Now that's just talking pure statistics, pure reversions to means and normal levels. But I also think it's very important to understand the fundamentals behind some of these things that have happened. So last year, one of the reasons that we had so much volatility was because rates were increasing, and the Federal Reserve was indicating that they were going to continue to do that. And so this year, as that kind of was reversed and that they started lowering rates again and started pumping a ton of money into the economy, and it landed primarily in the stock market, that was one of the reasons, one of the biggest reason, if not the only reason, why we saw such a drop in volatility this year and markets just start ticking up higher and higher and higher. Really, that's been a result of all the new money that the Federal Reserve has been pumping into the economy that's just been going straight into the stock market. And so there are fundamental reasons behind these things, but even with fundamental reasons, you tend to experience statistical norms within systems. And so when you have when you have a year like this year that has been very low in terms of volatility, I think next year we're going to experience a lot more volatility than we did this year. We're going to see a lot of stock market drops, a lot of stock market spikes, and we're going to start to see some of the craziness unfold that the Federal Reserve has been masking and keeping at bay this year. They've been keeping it at bay this year. They've been putting a lid on it. They've been holding it down. And I think next year we're going to start to see some of those things pop up, rear their ugly faces, and start to show the true natures of some of the dangers that have been lurking inside our financial system. Speaking of politics, okay, I know I wasn't really talking about politics already, but now that I brought it up, let's talk about politics. Since I expect that we are going to see some volatility this year, there is almost no doubt that Trump is going to blame the volatility on, number one, the Federal Reserve. Maybe he's going to say they're not lowering rates enough. Maybe he's going to say they're not printing enough money. Whatever it is, he'll probably blame them. He'll probably blame China. But the number one thing I think he's going to start blaming, especially in 2020, is the Democrats. And I honestly don't think it matters which Democrat starts leading in the polls and which one eventually gets the nomination. He's going to start laying the blame for whatever happens in the stock market on that, especially if it's somebody like Elizabeth Warren or Bernie Sanders, or even somebody like Bloomberg. I actually don't think it matters at all who it is. but I think he's going to blame the volatility primarily on whoever the Democratic candidate turns out to be. And he's going to say, hey, look, investors are selling, people who are smart with their money, Wall Street, investors, retirement funds, they're all collapsing because they're expecting that a Democrat is going to get elected into office who is going to destroy our economy, or whatever he's going to say. You know, he always says crazy things, and on Twitter especially. And so I think that's going to be the number one place that the blame is going to be laid from the White House on what's happening with the economy. Now, the reality is I do think we'll have a big market sell-off if we do have a nomination from somebody who is a big advocate of far left, very socialist policies. Very socialist policies tend to not be big economic drivers, they tend to be big economic detractors. And so if you get somebody nominated who's advocated for things like Medicare for all, student loan forgiveness, universal basic income, and pairing highly stimulative monetary policy and fiscal policy with green energy, climate change type of agendas, I think those type of policies have a really good chance of at least making the stock market more volatile and making the stock market sell off. Because right now a lot of money is in the stock market because the political environment is one that is saying, hey, we want to help big and small businesses, and one that says, hey, we're going to levy tons of taxes on the economy is one that businesses and investors step back and say, hey, this is probably not going to be conducive for large profits moving forward. And so you're going to see some selling off in that type of environment. And right now I'm not even talking about who wins. I'm just talking about who wins the nomination, because there's always a likelihood of an election happening one way or the other. And so whoever wins the nomination will likely have some impact on the markets. Side note here, I don't actually think what Trump is doing is healthy for the economy long term. If you've been around the channel for any amount of time, you know that I come from more of an Austrian or libertarian standpoint on the economy, and I think that everything Trump has done in office is pretty much the exact opposite of what he said on the campaign trail. He said we have an economy that's in a bubble. As soon as he got in, he just started expanding the bubble. He said the stock market's built up on easy money policy. Well, he's expanded that easy money policy. He's been the biggest advocate of lowering rates and printing money for the Federal Reserve. He's expanded the deficit more than almost any other president has. He's blown up the national debt. So I think everything that he's doing is kind of the opposite of what I think is healthy actions for an economy long term. So please don't get mad at me here. I'm trying to be anti-political here, not trying to take sides. Ultimately, I don't actually think it matters who wins the presidency for the next election. I think we're in for a collapse because the entire system is built on rot. So it doesn't really matter who's in the Oval Office. Back to my predictions on next year, and since we're still talking about politics, at this point I do think Trump will win the re-election. Now this is based off of Dr. Alan Lichtman, don't know how you say his name, sorry about that, but he's a professor of history at American University out of Washington, D.C., and he has accurately predicted the last 16 elections. There's no other predictive model that has that track record. The last 16 elections in a row he has predicted correctly. And at this point, his model still predicts that Donald Trump will win the re-election, and it is based on a number of keys. And if a certain number of keys are turned, then the incumbent party will lose. If those number of keys are not turned, then the incumbent party will win. He says it's not about the candidates whatsoever. It's about the incumbent party and whether more than, I think, 6 or more than 6 of the 12 keys are turned. And so his model, which has been right the last 16 elections, still predicts that Donald Trump is going to win the re-election. Although with 2020 coming around, who knows, his model may change. But at this point, as of early December 2019, it still looks as if Donald Trump is going to win according to the most accurate predictive model there is. Now, the last thing in this video that I'm going to talk about is what I think will happen directly after the election, because I think 1 year from today, next December, I think will be the historic kind of the turning point in everything. But before I get into that, I want to talk about what I think will happen the rest of the year before we get to December. And the main thing I think is going to happen next year is we are going to start to see that inflation that the Federal Reserve has been creating. In some of my former videos, I've defined inflation, and really quickly here, inflation does not actually mean price increase. The classical definition of inflation is an expansion of the total money supply, and a result of inflation is an increase in prices. And so there is, due to the Cantillon effect, there is kind of an order or a hierarchy of where inflation hits prices first. And usually inflation hits asset prices first. So we've seen that already. real estate prices have skyrocketed, stock market prices have skyrocketed. And so you see this inflation, the billions of dollars that the Federal Reserve has been pumping into the economy has hit asset prices first. And so we've seen asset prices start to skyrocket. Now, the next place that inflation is going to hit and make prices go up is going to be prices of goods and services. Now, this is allegedly where the CPI says it's tracking inflation, is basically the cost of living, but you and I both know that the CPI, especially the core CPI, removes and manipulates the data to make sure that they're not showing real inflation, because if they were showing real inflation, then the federal government would have to pay a higher interest rate on its treasuries. And so they want to say that there is no inflation while at the same time causing inflation because it makes their debt easier to pay off. But what I think is going to happen is that the CPI is going to start to show at least some of the inflation. And if the CPI doesn't show it, which it might not because they manipulate the CPI and they control basically what it says. So what I think is really going to happen is more and more people, especially in the mainstream, are going to start to realize the CPI is broken and there is real inflation and cost of living really is going up at a rapid pace for most Americans, and the real official CPI numbers are not actually showing it. So my prediction about inflation is that most Americans are going to start to notice and realize a massive and quick increase in the cost of living. You're going to see food prices start to go up. You're going to see rent prices start to go up. You're going to see gas prices start to go up. You're going to see tuition prices start to go up. Interest rates that are not directly controlled by the government and the Federal Reserve are already starting to go up. So you're going to see mortgage rates start to go up. And we've already seen that. Even though the Federal Reserve isn't lowering rates, mortgage rates have actually been going up. They haven't been able to control those rates as neatly as they have some others. And so broadly next year, I think we're going to see and notice and experience a massive increase in the cost of living. Now, the downside to this is that wages are always the last one. Wages are the lagging prices to be impacted by inflation. And so especially in bureaucratic organizations, especially ones underneath the government, you're not going to see wage increases that are in proportion to the actual amount of the cost of living that is going to be increased, especially just in 1 year next year. With that, I think gold price, I think 2020 is going to be a fantastic year for the price of gold. And I always say this, gold's not an investment. You're not going to make money with it. You're going to preserve your purchasing power. You're going to protect your wealth because it just keeps up with inflation. It responds to the amount of money supply expansion. And so you're going to see gold go up, and that's going to be an indication to you how much money is being pumped into the system and how much our cost of living is actually increasing by, because that's how gold responds, always has for the last 3,000 years. And so I think we're going to see a big increase in the price of gold, especially because it's faced headwinds, especially over the last 6 months, where the dollar has been increasing and getting stronger, and gold has continued to tick higher, especially in the face of the stock market rallying at record paces. And so it has continued to chug along, even in the face of headwinds. And so once everybody starts to realize that the environment is shifting and big money has started to get into gold already, I think you're going to see a massive increase in the price of gold. I think this year we could hit all-time highs up at that $1,800 mark. I don't know if we'll take it out this year, but I think we'll hit those levels. And lastly, December 2020. I think December 2020 is going to be the month. It's going to be the tipping point, the turning point, because it's going to be right after the election. And I think the election is actually going to be key in this next new decade. And I don't think it matters who wins. Here's the truth. Right now, Donald Trump is doing absolutely everything he can to get reelected. And a huge part of that is pumping the economy full of fake money. Now, we've seen, and I've talked about before, how the GDP is basically just a reflection of government deficit spending. And so Donald Trump knows this. And if he wants the GDP to continue to show positive numbers, because he's using that as a gauge of the economy, he's going to do what it takes to make that number big. And right now, because of the way the GDP is calculated, the way to keep that number where he wants it is to continue to increase government spending, deficit spending, expand that national debt, and force the Federal Reserve to continue printing money at record paces. This is the only way that the GDP is going to stay where he wants it, because of the way that the GDP is measured. And he knows this. And so he knows if he wants to get reelected, the number one thing that cannot happen is a stock market crash, because he's built his entire presidency on the price of the stock market. And so the only way to keep that elevated at the levels that it's at, even though we are probably going to have some volatility, is to force the Federal Reserve to continue to print money and to continue all of this deficit spending. So I think we're going to see the GDP at the levels that it's at right now. I think we'll see some stock market volatility, but I think the Federal Reserve will respond with even more printing, even more debt monetization, even more quantitative easing, probably lower interest rates. And what that's going to do is that's going to juice the manipulated official numbers enough to where he thinks he can win the election. Now, here's the problem with that. Whether he wins or whether he's replaced by a Democrat, I think after the election, we're going to start to see the collapse unfold. Because right now, if you imagine the economy as a big bucket, bear with me here, I know this is a weird analogy. Right now, the economy is a big bucket and it's got some holes in it. Those are structural problems with the economy. The only tool the Federal Reserve has to keep this bucket full is to pour more and more water into this bucket. They know there's holes, they know that there's structural issues that are causing water to come out, but they're just dumping more and more water into the bucket. Over this last year in 2019, we've seen those holes get larger and larger and larger and start to pop up in unexpected places. And we've seen some crippling in the walls of this giant bucket because there's so many holes. And so what the Federal Reserve is about to do is they're about to break out the fire hose. Water is pouring out of this bucket at such a fast pace that the only way they can keep it full is to grab a fire hose and start injecting water at the fastest pace that frankly, we've ever seen in this country. And the water is going to be flooding into this bucket at such a fast pace that the water coming into this bucket itself is going to start to break down the walls. And the tool that they've been using will become what Ray Dalio likes to call pushing on a string. Ineffective. The very thing that central bankers have been doing around the world to prop up the economy is going to start to break it. And so, like I said, I don't think it matters who wins, because whether Donald Trump wins or somebody that's an extreme socialist wins, I think we're going to start to see the collapse unfold because the system is rotting and the system is broken. And once Donald Trump wins, he doesn't care about winning again. And so who knows what will happen? We don't know if he will continue all the stimulus. And that could be the trigger itself. If a far left socialist wins and everybody realizes, hey, we're going to have this economy taxed out the years, then who knows what could happen with the sell-offs. And so I think the facade, I think we have about 1 year left here in how far we can push this and how long we can keep the facade going. But ultimately, the rot underneath the floor is so severe that I do think we're going to have a massive collapse. And I think it'll probably start next December. One quick caveat. Just because I think we're going to have an economic collapse does not mean that I think the stock market is necessarily going to collapse. One of the hallmarks of hyperinflation is prices rising at unprecedented rates. And if the price of bread goes from $5 to $500, what do you think the price of Amazon or McDonald's or Google or Intel or Facebook or the general stock market is going to do? It's also going to go up. But just because the price of something is going up does not mean the value is going up. You could still be losing money in terms of purchasing power because the dollar is collapsing at a faster pace than even the stock market can rise. And that's it. Those are my 2020 predictions. Don't hold me to it because I might change these predictions and anything could happen. We'll see. People always get in trouble with these prediction videos, but I'm going out on a limb and I'm saying those are my predictions. Volatility, inflation, gold price at all-time highs, and a collapse in December. Thank you so much for watching. I really appreciate it. If you like the content, it would mean the world to me if you'd subscribe to the channel, hit that like button for the YouTube algorithm so that this video will pop up in front of other people and they can see it as well. Really appreciate it. You guys have a great day.